Hi, this is Raghee Horner, and I am coming to you live from my trading office. And it's Sunday afternoon, actually just around lunchtime, and I was scrolling through some of the emails that I've got over the past couple days, and two pairs seem to be dominating the email topics that I'm getting, and that's the dollar Swissy and the dollar yen. So before I run out here and go fishing, I thought, you know what, let me take a look at these two charts, record a quick video, and we can keep the discussion going through the week. So what you're looking at, of course, is the daily dollar Swissy. We can see what's happened to the daily dollar Swissy in terms of the bounce. You can call it a correction, which I think the correction is really transitioned into a complete transition of the downtrend. When I say a complete, I mean it's not like we have a wave that's somewhat confused. We have a wave that now has flattened out, and we're starting to get the first of what could be more green grab candles. So it's a shift in not only the wave, it's a shift in the sentiment from bearish to neutral, and now even a little bit positive. So let's take a look at the Fibonacci retracement levels here. The Fibos, as you can tell, are showing that from the last major move, you can see the Fibbo that I've drawn here. In the last major move, we've cleared the golden mean, which actually was support for this consolidation, the 786, which was resistance for the consolidation, and now we've shot up to the 886. So take a look. Every one of these three Fibbos has been respected. I love seeing the Fibbo respect because that tells me, one, I've got the last major move nailed for this drawing, and that these will likely be ongoing support and resistance until we clear this last major move and perhaps move on to another. At any given time, though, let me remind you, there are a number of Fibonacci retracements that we could be looking at. I don't believe there is only one Fibbo, but I try to draw my Fibonacci retracements in the spirit of the last major move as best I can. So take a look. Again, this transition was caused by what? Let's talk about the psychology here for a minute, because that's really where the difference between these two charts really becomes apparent. Here's the dollar yen. Okay, and everyone's asking me, why is it that the dollar yen is back pressured by the bears? All that selling pressure coming in, coming down off the resistance of the wave, coming down towards those lows, waiting here. And the dollar Swissy has been able to effectively dodge that bullet. The Swiss National Bank has really been able to allow that franc to weaken against a number of currencies here, of course, against the dollar. I think the reason is twofold, okay? And this has less to do with fundamentals and more to do with psychology. Think about, and this is for any trader out there, I've been actively trading Forex since about 99, 2000, but before that, I was trading futures, single currency futures on the CME. And trading currencies, whether it be the pair, spot, or the futures, we're dealing with the same fundamentals. The times that I can recall the Bank of Japan stepping in and trying to make some sort of change to the value of the yen, it's more than I can even remember. We probably deal with this once or twice a year. I literally can remember the Bank of Japan stepping in and either selling yen, whatever it is, doing something, intervening so many times, and they do it in the same way, and it's almost laughable because this market is so big. Even a central bank and the kind of liquidity that they can wield around isn't enough to stifle how many $1 trillion a day are we trading now? What $1 trillion market wants to do. You just can't combat that. And when you think about the Bank of Japan really not surprising us with any kind of new tactic or strategy or any kind of new rhetoric, it's the same thing. Traders have seen it, and they know for the most part, if they hang on, take a look back here, if they hang on, they're pretty much going to get resumption of the trend if there was one indeed. And usually the interventions come in the effort to reverse or stifle some sort of trend. So traders are not surprised by what the Bank of Japan does. They've seen the film. They know the footage. They know the. For example, if you're a football fan, which I am, you've seen what the quarterback does and the tendencies, and we know the playbook, so to speak. Nothing new here. This player's been around, and they behave the same way. Psychologically speaking, okay, I'm not even going to get into the fundamentals here, because I think a lot of times traders become very intimidated by fundamentals because, one, sometimes it's difficult to even interpret, and two, it's even more difficult to see what's been baked into the cake, to what degree that information's already been discounted. Okay, so there's a number of things that make fundamental analysis challenging. Let's just talk about the psychology of the market here. When's the last time you can remember the Swiss National Bank intervening and getting as much press as they are right now? I can't even recall the last time in over a decade that I've seen so much consistent press, so much consistency in the statements and the posturing out of the Swiss National Bank. It just really is not something that happens very often. The dollar Swissy arguably is a minor pair. It's not even considered a major amongst the big three: the euro US dollar, the dollar yen, or the cable. Okay? So we don't have a playbook on what the SNB does. We don't have any kind of clue as to what the tendencies are of the Swiss National Bank. Okay, unlike the BOJ. This is kind of fresh, and not only that, the Swiss National Bank is not messing around. Not only do we not know their tendencies, they came out, and when they could not affect some sort of change with a more subtle interest rate type approach to weakening the franc, they came right out and said euro peg, freaked the market out, and showed traders and investors that they meant business. Did we ever believe there's going to be a peg? I don't think so. I think they probably, they're probably going to bring it somewhere in the vicinity. I've heard of 120. I don't even know. And frankly, as far as what the particular peg is, I don't even really care. What the bottom line is that the SNB was able to affect change because we don't know their playbook. And they came out with such a dramatic proposal, this idea of pegging, that we knew they meant business. And whether it becomes some sort of tax place on foreign investments, whatever it is, whatever the rumors are, the fear is there. In fact, Friday's move higher, there was a rumor going on that they were going to start imposing a tax. It never panned out to be true, but this gives us a really good idea of just how effective the SNB has been with messing with our minds. We don't know what their tendencies are. We haven't got a playbook on what they're going to do. And so because they've come out really just with a shock and awe campaign, that's really what they've done. They've come hard, they've come fast, and with all their guns ablazing, people have backed off. I don't know that they've turned the sentiment solidly bullish yet on the dollar Swissy. I don't know that they've been able to weaken the franc to the point where people actually want to go start selling it. But what I think they've done is squeezed a lot of the short side of, say, the dollar Swissy. I think they've convinced a lot of bears that they mean business, but even more so, I think they've convinced a lot of bulls that continuing to buy the franc and pushing it higher and higher is going to be a volatile ride, and even one that is not going to yield a positive result. So traders are ambiguous about what the future of the franc is. If we can't forecast a continuation of that uptrend in the franc itself, they're going to back off, and I think that's what they've effectively done. Really, really kudos to the SNB. They had an agenda, and they've executed it really perfectly. It's not a matter of what I think as a trader. I hate this kind of movement, this type of central bank intervention, messing with the trend. Personally, I hate it, but you know what? It's not about me. The SNB had a mission. I have to respect it, because right now, we don't know what they're going to do. They're completely unpredictable. We don't have the type of predictability that we're so used to with the dollar yen, which is why I think the dollar yen is resuming its downtrend, while the SNB is effectively scared franc bulls, at least out of the market, or at least fresh new bulls away. So that's my take on the dollar Swissy versus the dollar yen, a purely psychological play in terms of not knowing what to expect next, and a downtrend that's absolutely intact on the dollar yen, and a trend transition on the dollar Swissy to what is neutral to even slightly bullish. So we'll see how next week plays out.